Applying smart money concepts is hard, confusing, and full of mistakes. I know because I've been there. I walked this path alone, and I made every mistake possible. That's why I made this video, to explain every smart money concept you need to know in just 10 minutes. And even better, I'll introduce the one indicator that makes this easy, like having a mentor on your screen. In this video, we'll cover liquidity, breaker blocks, sessions, inversion fair value gaps, market structure, order blocks, and you'll see how one powerful TradingView indicator automatically spots all of these for you, so you can trade smarter with more confidence. Let's start with liquidity. Liquidity in trading refers to the availability of orders in the market, but more importantly, it's about where stop losses are placed. Why? Because wherever retail traders place their stop losses, that's where smart money looks to enter the market. Let's say the price is in an uptrend. You see a swing low. If the price returns to this low, there are two types of traders. The first type will go long with the mind that the price will reverse from there. The second part will go short, with the mind of the price breaking the swing low and will continue the downtrend. So many traders place their short positions and stop losses just below that swing low. Now think like smart money. If you want to go long, you need someone to sell to you. And what's a stop loss on a long position? A sell order. So smart money drives the price below the swing low, triggers the stop losses, and who is in a short position there, grabs the liquidity, then reverses the market and moves in the real direction. That's called a liquidity grab, and it's one of the most powerful patterns in the market. Where is liquidity found? Liquidity is usually stacked at two key places: above swing highs, below swing lows, above equal highs, below equal lows. These are the obvious zones where traders either take profits, enter reversals, or place stop losses. And smart money knows it. They often push the price just beyond those zones to trigger stop orders, before sending the price the opposite way. The Flux Chart Price Action Toolkit, developed by the Flux Chart Group to manage all of these for us. To use it, just open a chart on your TradingView and press the slash on your keyboard inside. In the Indicators section, search for Flux Chart Price Action Tool. Then click on it and it will launch the indicator on your chart. Open Settings. From here, you can adjust it based on your strategy. Turn concepts on or off, pick your favorite colors, and keep your chart clean and focused. Now turn off all the futures ticks and just turn on sell-side liquidity and buy-side liquidity and equal highs and lows. Look how accurate this indicator does this automatically for us. It just highlights buy-side liquidity and sell-side liquidity, showing where stop losses and pending orders are sitting. The market moves to them, grabs the liquidity, and makes reverses. Let's move to the next. The next important smart money concept that we will cover is order blocks. Imagine you're in a market and a big buyer, or a group of big buyers, suddenly steps in and starts buying a huge amount of a product at a specific price. That price level becomes important. In trading, this is what we call an order block, a specific price zone where a big buying or selling happened in the past, usually by big financial institutions or smart money. When the price comes back to that same level again in the future, it often reacts. Why? Because traders remember it. Big players might place more orders there again, and smaller traders might expect something to happen too. So these order blocks become hot zones, places where price might bounce or reverse, giving us potential trading opportunities. No matter what time frame you are in, this indicator will highlight the order blocks in that specific time frame for you. Let's move to the breaker blocks, a smart money strategy for entries. A breaker block is a failed supply or demand zone. Price initially respects it but then breaks through it, trapping traders who expected a reversal. Here's the mistake most traders make. They place their trades at regular support or resistance zones, but they don't check if the market has already invalidated those zones. This indicator highlights breaker blocks for you, so you always know when a key level is no longer valid. That way you trade with the banks, not against them. To trade with the banks, you will need to trade at the right time, so you need to know the sessions. The Forex and stock markets move in predictable ways during different sessions. London, New York, and Asian sessions each have their own characteristics. Trading at the wrong time leads to unnecessary losses. For example, trying to scalp during the Asian session means trading in a slow, ranging market. With this indicator, not just important session times are automatically marked for you, but also includes Frankfurt and 3 more. So you can have a deeper analysis to know exactly when the real moves happen. One of the smart money's important concepts is fair value gaps. A fair value gap is an imbalance in the market, when price moves too fast in one direction, leaving a gap that needs to be filled. Inversion fair value gaps are even more powerful. They show where the market reverses after filling the gap. In other words, they are disrespected fair value gaps, and the price is likely to revisit these zones again. Most traders don't spot these, but they are critical for understanding market structure. This indicator marks FVGs and inversion FVGs on your chart automatically, giving you a clear map of where price is likely to move next. Market structure is the foundation of smart money concepts, yet many traders struggle to read it accurately. Here, we see a clear break of structure. To confirm a clear break of structure in an uptrend, we need to see a low, a high, a higher low, and a higher high. When the price goes up from a higher low to break the previous high, we have all confirmations of a break of structure. This occurs when price takes out a previous high or low, signaling that momentum is empowering. This indicator, by identifying a break of structure, validates trend direction and prevents traders from taking counter-trend trades. The next concept is the trend shifting indication. Here, we see a clear change of character. Imagine this uptrend. A change of character occurs when the price moves below the previous low, and a candle breaks the low and closes below it, signaling that a new momentum is empowering. To confirm a clear change of character in an uptrend, we need to see a clear uptrend with breaks of structures. Then we need to see a low, a lower high, and then a lower low. Now, you may think why we don't consider this as a change of character. And here is an important point you will learn just in this video. If you pay more attention, you can see we are exactly at the end of the week. In situations like this, to identify real market structure, you will need to wait for next week's structure. And that's why we don't consider this a change of character at the first step. A change of character means a shift in momentum where the price is going to make a reversal. Any mistake in applying these concepts to the chart may bring you a big disaster. Here is one of the common mistakes every trader, even professionals, makes, and there is no education about it. In this 1-minute chart after the downtrend, the price goes up by creating gaps and breaking these two highs that were made before. Many traders may see this as a change of character, but they are wrong. Here we have the same scenario. Every time a candle breaks the previous high with its body and closes above it, this break of structure signals a powerful uptrend. But this scenario will shift to a downtrend indication if we identify a change of character there. So when we are in a confirmed uptrend like this, if a candle breaks the previous low with its body and closes below it, that's a change of character which indicates a potential downtrend, right? And here is a big mistake again, and no one teaches it. In this situation, to confirm a change of character, after we confirm this candle breaks the previous low, we will need to see a lower high first. And that's the point. So, because there is no visible lower high, we cannot consider this break a change of character. That's why I admire this indicator, because it is so accurate about smart money concepts, and it highlights these concepts so accurately. Here is the same. When this candle breaks the previous high to confirm a change of character, we need to see a higher low first, so this is not a change of character. But this low forms higher than this low, then this candle breaks and closes above this high. So this is a change of character indicating a shift from this downtrend to an uptrend, and this indicator highlights it well. By combining break of structure, fair value gaps, and order blocks, traders get a high probability trade setup with institutional confirmation. Every time the market is starting a move by an order block with a fair value gap and a break of structure, it is going to reach a liquidity level as its target. These liquidity levels often act as magnets, because these are the levels where retail traders are interested in putting their orders, so there will be a place they will leave stop-loss orders to. And that's why, when we see smart money footsteps, we can predict the price is going to target these levels. So, instead of manually searching for these zones, the indicator does the work for you, ensuring you never miss a high probability target point. Most of the time, after the price reaches these positions after sweeping, liquidity makes a reversal. A buy-side liquidity sweep often signals a bearish reversal as smart money offloads positions at higher prices. A sell-side liquidity sweep often precedes a bullish move as institutions clear out weak positions before entering long. The indicator even helps you avoid fake signals. And here's where this indicator really shines. It helps you avoid fake signals and bad trades. See this gap? A lot of traders would have taken a trade here, thinking that the price would return to fill the gap, or respect this 1-hour order block, and then would continue the uptrend. But since our indicator highlights an order block and a 5-minute timeframe chart, which is respected at this position and a change of character there, now we know that there is more possibility that the price will break this fair value gap, and trading this gap is so risky because we confirm all smart money footsteps that indicate the price is going to target sell-side liquidity. So while it is providing us interesting trade opportunities, it also keeps us out of bad trades and saves money. The powerful indicator that does all of this is called the Flux Chart Price Action Toolkit, developed by the Flux Chart Group. Besides what we covered in this video, it has even more capabilities. But keep in mind, using every single feature at once can clutter your chart. That's why it's customizable. If you want to check out other free tools from the Flux Chart Group or register for access, we have added a link in the comment section. They have great resources for traders like you. Hit like if this helped you, subscribe for more videos, and I'll see you in the next one.